You've led one of Kenya's largest banks by customer figures. Your growth has been attributed to, I quote, humanity rather than technical financial tools. Explain the formula you've employed at Equity Bank, growing it into one of the more prominent banks.
Thank you very much. First is on the structure of the bank. It is more of a movement than a financial institution. The second one is on the business model. It focuses on the bottom of the pyramid. It's all about delivering financial services that are affordable, they are and accessible, and in a convenient manner. And it's a high volume, low margin business model whose purpose is to contribute to the socio-economic transformation of Africa, and hence the view that it's more of a social investment contributing to humanity's welfare than focusing on the tools.
All right, now when you talk about the socio-economic role that the bank should play, the World Bank says that over 34% of Kenyans still don't have access to basic financial services. I know you focused on low-income earners and hence the high volumes, but what more of a role can you play in terms of a solution to this problem?
Thank you. If we put the question in perspective, Equity started its journey of contributing to financial access when the country had only 4% of population banked. We have seen this grow to 23% of the population, and Equity is home to 57% of all bank accounts in Kenya. Going forward, Equity is now focusing on taking financial services to the last mile, and this is being done through the agency model and at the same time convergence with the telecoms to provide mobile banking services, and this reduces the cost of financial access. So I would say we are contributing through this by innovation and creativity with a view of leader being more competitive than the mattress where the unbanked population keep their money.
Obviously, you mentioned agency banking as being one of the dynamic innovations that's allowed you to boost your profile. You're one of 4 banks that's been granted a license in this respect, but critics of agency banking say that the legal framework isn't solid and there's a real need to clear that up in terms of the third-party role that agencies play so that you protect at every step depositors' funds. What are you doing in that respect?
It is true that very little is known of agency banking in financial services, but we applaud the step the Central Bank of Kenya have taken to give innovation space, and I believe we'll continue tightening the rules and regulation as we understand agency banking. But at the moment, what we have done is restrict the number of agents we appoint and have very close supervision and automate most of the processes. We have made agency banking to be operated in a paperless environment where the customer, whether they're depositing or withdrawing, will have a receipt being generated by the system and ensuring it's real-time online transactions such that there is no delay or posting. So the customer is certain that the transaction have been effected on their account before they leave the agency premises.
You speak about being relevant by employing technological tools, and we know that this has been one of the characteristics of Kenya's leading banks these days, is to synergize ICT with banking services, with the operations of banks, introducing new functions such as mobile banking. What have you done specifically in this respect when you talk about innovation and relevance for Equity Bank in this evolving ICT economy?
Yeah, Equity has used ICT as an enabler, and we have invested heavily such that we could be able to automate most of the processes. We could be able to offer our customers self-service options. We could be able to integrate with the systems of partners. I believe we are the only bank within the Eastern Central African region with a level 4 data center. All these to be able to enable us to take advantage of the possibilities of innovation using technology. More importantly is to reduce the cost of financial services, whereby you reduce the human intervention in the provision of those services, and at the same time the speed and efficiency is heavily enhanced. So technology has heavily been used by Equity as an enabler.
Obviously, we talk about your business model, the focus on low-income earners, particularly those in the informal sector, particularly also those within the agricultural economy, which is the backbone of Kenya's economy in general. But here's the perception that this segment of the market is high risk. You've taken a divergent view on this particular issue. Talk to us about your approach to risk, about your approach to credit rating those in the lower echelons of society, because they are essentially your customers, but in the traditional world, they wouldn't be.
It is true that the small-scale commercial farmers are a dominant segment of the customer base of Equity Bank. And Equity has focused on this because we have realized we can't ignore 85% of the population that are living out of agriculture. We are also very hopeful that like happened in Europe during the agrarian revolution, or in Asia during the green revolution, Africa in its own will transform agriculture. And we want to be an agent of agricultural transformation, because that is the only way we could uplift the standard of living of the African people. So to be able to manage the risk associated with the agriculture, we have focused on the household income as opposed to agricultural purely crop income. So that allows huge diversification when you focus on the household. The second one is that we have used huge mitigation factors. We focus on transforming peasant farming into small-scale commercial farming. And once it reaches small-scale commercial farming, then we transform that to using modern practices, to what you could call modern farming, where you mitigate most of the risk either with things like rainfall harvesting, things like drip irrigation, and where this has not applied, then you are able to use value chain agricultural financing, such that it's the whole value chain that you create into an ecosystem, make it stable, and consequently it's self-preserving, such that you have the producer is, you finance the transporter. So it is more of a revolving fund within the value chain. And of course, we are now looking at things like livestock insurance, crop insurance, still to mitigate the hazards that are associated with weather.
A final and a brief comment for you. Obviously, Kenya has surpassed expectations of growth post the electoral crisis. You've grown over 5% in the previous year, expectations of growth over 6% going forward. And with that, the aspirations of Kenya articulated in Vision 2030 to invest heavily in infrastructure, to create urban centers across the various regions of Kenya, to bank the unbanked. Your role in Vision 2030?
Thank you very much. I'm the chairman of the country's Vision 2030. This is the aspiration of the Kenyan as to where they want the economy to be at 2030. And the aspiration is that the economy will have become a middle-income economy, providing high-quality standard of living of the people, and the country will be highly competitive globally. It is true that at the moment the stars look aligned to supporting Kenya to make a breakthrough in terms of economic growth. When we see what is happening in our politics, when we look at what is happening in our structures, particularly the new economic constitutional dispensation, when we see the investment in our infrastructure, and the fact that the country has now managed to enter into an investment grid and consequently attracting to the attention of foreign direct investments. And the peace that is prevailing within the neighborhood, seeing what is happening to Sudan, we see the possibility of this country sustaining rapid growth into the medium and long term, and consequently be able to achieve Vision 2030.